Hello everybody watching my channel and this video. Today I want to address the title of this video because as you can see I have had CNBC playing the whole day, and one very crucial Russia-Ukraine fact that I heard was not mentioned on CNBC, which is where very high-level portfolio managers and investment advisors and hedge fund managers, etc., get their news from and listen to competing and contrasting and various wide arrays of ideas. One super crucial thing that I think needs to be mentioned is the conversation between Zelensky and the Prime Minister of Israel. Why is this important? Well, the United States funds Israel, and they're generally quite quiet in international relations unless it directly impacts themselves, of which there are plenty of relations that do. They are under constant threat. But they decided to get involved in the modern conflict between Russia and Ukraine. And I think they are playing the role of a U.S. proxy. The United States supports Israel so much, and Israel certainly has interests in the region and wants general peace, as does the United States want general peace. But Israel, because they're not the United States, they can act in a little bit more of a, less beholden to the radical left media way. And I think that occurred very strongly today when the Prime Minister of Israel encouraged Zelensky to work a deal out with Putin. This morning, we got some words out of Putin that things were going well. The market was up. But then the market slowly just kind of deflated. It couldn't put the pieces together as to, are we actually making any real progress? And I think we are. I think we need the United States to be okay with that kind of deal between Russia and Ukraine. Ukraine doesn't join NATO. In my opinion, that's what caused this whole conflict. We knew before today that Zelensky was warming up to that. There might be some other provisions with regards to what military equipment they can have, with regards to the Donbass, DNR, LNR regions. We'll see what happens with that. But I am very optimistic that we might get some sort of deal. I think Israel coming out and speaking as what might be a proxy nation is certainly a good thing. One thing to note about Israel: they don't want to necessarily piss off the United States. So my assumption is they would not have made that kind of statement or that kind of encouragement to Ukraine unless there was consultation with the United States. But the United States, Joe Biden, doesn't want to be seen as somebody negotiating with terrorists, so to speak. So maybe they're using Israel as a proxy. Again, a theory, but we have to go with theories and gather all the data we can to test our theories, because we got to be ahead of the game. We got to be ahead of the curve. That's what we do over here at Left Skewed Investment Management. So my current theory is Israel is acting as a proxy nation and is giving us clues as to what Ukraine is going to do, and is filling in the gaps that the market couldn't seem to figure out as to why Putin was saying a deal was close. I think Israel is kind of saying deal's close. That would obviously be an optimistic thing for the markets. It would take that weight off, but it's not the entire picture. There's still going to be a whole lot of stuff we have to deal with after that, even if we are to get some sort of, even if we are to get some sort of peace arrangement. It's going to be a little bit of time before sanctions are lifted. That's not going to happen immediately. It's not going to happen overnight. There's going to be some time before sanctions are lifted. Sorry, I'm just adjusting the light because I think my face is looking kind of weird. I don't know how you were thinking about that. Please feel free to let me know in the comments below. That's the one. All right, let's see if that's a little better. That's a little bit better. We'll work on the lighting for future videos. Anyways, sanctions are not going to be lifted overnight, which means there's going to be fertilizer restricted exports. There's going to be some uncertainty with regards to oil prices, and new production isn't going to come on for some time. And even before this conflict, we were at a supply deficit situation, we'll call it. There was a supply-demand situation. There's a demand surplus over the supply that we had that was causing inventories to be depleted, and inventories are still being depleted. And we're not too far off the prices we were at right before this, what we called it the oil boner. Right before the oil boner, we're not too far off from where we were before the boner took place. So there might be a little bit more geopolitical premium built into the price of oil that we're experiencing now, but it's not that much. And certainly as time goes on, all else equals ceteris paribus, if the price of oil stays, if time continues to go on, that geopolitical risk premium is declining and declining and declining because the fundamentals of supply and demand will continue to push the price of oil up, as we and other analysts on Wall Street were expecting to be the case, and was the case before this boner that occurred in the price. So sanctions being lifted, it's not going to happen overnight, and I don't even think it's going to resolve all the issues. Then we've got the Fed. We've got the Fed tightening. That's something to consider. We've got really bad consumer sentiment. That's something to consider. So there's a bunch of forces at play. Yes, I think now we are going in the right direction with regards to Russia-Ukraine. It's a little, more childish than I expected it to be. We really should have been working on these deals before. There should have been way more conflict avoidance prior to the invasion, because obviously the troops were on the border for months. I can't believe nothing could have been done to stop that. I just find that incredibly hard to believe. And actually, after studying the situation for a very long time and making my first hire who helped me study the situation well before the invasion actually took place, my good friend from middle school and beyond since, Hunter Stern, he is our Eurasian geopolitical analyst. We are under the impression that with a simple guarantee Ukraine wouldn't join NATO, this invasion wouldn't have happened. Just 2-3 days before the invasion began, Zelensky said, we want to join NATO. Next thing you know, Russia's in Ukraine. So Zelensky's backing off the NATO. Israel's saying they should come up with a deal. I think there's a good chance we get a deal. But then we still have sanctions, and we still have other negative forces. So we have to be prepared for a recession. That has to be on the cards in our projections, in our forecasting. But a lot of stocks have acted as if they are in a recession, particularly the 10x growth stocks. There's a lot of great companies, the CRISPR companies, for example, that are down to below pre-pandemic levels. Think about that. They enabled genetic engineering. They were the underlying technology behind the mRNA vaccines, and they are trading at below pre-pandemic levels after we just had a global pandemic. Doesn't make a whole lot of sense, in my opinion. So those companies, I believe, are quite cheap. And there are other companies like them that can present tremendous returns that are also quite cheap. There are tech stocks that are bigger that are quite cheap. I have purchased Meta. It's a decent sized position, not too big, not too small, but I have it. So there's certainly opportunities out there. But there's also a lot of stuff that is too expensive still, or just feels well fed. There was a JP Morgan analyst who downgraded Chevron, and while I might not necessarily agree with that call in particular, I agree with the sentiment that this stock has had a run and the valuation is full. I think there are a lot of full valuations still out there, even though they might be down somewhat. They might have gone from post-explosion to now full. Still some stocks that are too expensive. So we'll see if that air gets deflated. I'm not saying it will. I'm saying that there are opportunities and there are expensive stocks. And if you stay with the opportunities, I think you can buy if you're aware that a recession may occur and you have some allocation of your portfolio designated for protecting against that. I have some SPY puts. I have some stocks that may benefit in a recession, etc. And then I have 10x growth stocks that I think are cheap. And I have bigger growth stocks that I think are cheap. And then I have commodity plays that I think have a reasonable probability of being profitable. So, that is today's video. We are both optimistic and pessimistic. We are optimistic on Russia-Ukraine being resolved quickly, but we are cautious and somewhat pessimistic on the overall economy. And we are navigating an environment of extreme uncertainty. And we have to act as if we are uncertain. That's why we have positions for various different outcomes. We don't know what's going to happen. This is a quite high level of uncertainty. Some of you who are lifetimers on this channel may know that we correctly predicted a coronavirus downturn. That was much more certain than trying to forecast the next 6 months. So, think about that. We were more certain about a coronavirus downturn more than a month before it occurred in this country than we are right now about what's going to happen next. There's a lot of forces. What we do know is that there is uncertainty, there is cheap stuff, and we're playing it. So, we'll see what happens. If you have any questions, feel free to drop them below. So I know I threw a lot of ideas that might not be totally accepted, left some uncertainties and created some uncertainties myself, and maybe somebody would like to get more clarity on exactly how I'm thinking. So that's today's video, and until next time, peace out.